Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. It wasn't that long ago that AMC Entertainment was one of the hottest stocks on the market, but that has absolutely reversed in the last year. Shares are down nearly 90%, and I think things are actually going to get worse for this company. That's what I want to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And let's go over a quick snapshot of what the stock prices look like and what the metrics are for AMC Entertainment. This chart is the stock chart for the last 5 years for AMC. You can see that shares peaked over $500 per share in 2021. That was just a crazy time for the company. But everything has been downhill since then. Shares are now trading for $8.42 as I'm recording. And over the past year, shares are down 89%. On top of that, we have total debt of $10 billion for AMC and a market cap of under $2 billion. Not a lot of cash on the balance sheet with about $400 million worth of cash. So highly leveraged company. And the real downside is that AMC is losing money. This is a look at revenue, free cash flow, and gross profit margin. I will shrink this down to a 5-year chart, and you can see that revenue 5 years ago was about $5.5 billion. Now that's $4.3 billion in the last 12 months. This just shows the change in consumer behavior over the last few years. During the pandemic, people got used to watching videos at home. More was released at home, and that window for theaters has really shrunk. That may be widening a little bit over time, but we have not seen revenue go back to where it once was. Free cash flow, negative $700 million. But look at this. Before the pandemic, this was not a cash flow machine. This was a company that was basically break-even cash flow. And now with revenue down, it's just doing significantly worse. Gross margins also only about 10%. That's down from 15% before the pandemic. So there's not a lot to like with the operating trends for AMC. The question for investors today is there some sort of turnaround coming? And I just don't see how that's possible. There's a ton of fixed costs that goes into running a movie theater. You typically have to lease the space, spend money on build outs. There's a lot of expense and fixed costs that goes into running a movie theater. But then the upside is your incremental customer or your next customer is very, very high margin. The problem is if your revenue is declining, that means your profitability is declining at an accelerated rate. That's exactly what we're seeing in the company's financials, negative free cash flow. And unless revenue increases somewhere in the neighborhood of $1 billion and we get back to those 2019 levels, we're going to be nowhere near free cash flow positive for AMC. So a really challenging position. And given the trends with technology, with better and better TVs, with better streaming services, I don't see theaters coming back anytime soon in a really strong way. So this stock is down, but it's also one that I would not be betting on recovering. But what do you think about AMC? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.